Welcome to Stoxies. I'm Helen. Today we're diving into Tesla. Tesla is an innovative American company founded in 2003 with the mission to accelerate the world's transition to sustainable energy. Created by a group of engineers, including Elon Musk, it focuses on the development and production of electric vehicles, batteries, and energy solutions. Tesla is known for its groundbreaking models, which stand out for their performance, range, and autonomous driving technology. In addition to vehicles, the company offers energy storage products and solar solutions through Tesla Energy. Tesla went public on June 29, 2010, with a price of $17 per share, closing its first day at $23.89, a gain of about 41%. In the early years, 2011 to 2013, the stock moved upward, with moderate increases in 2011 and 2012, and a remarkable surge of roughly 344% in 2013. From 2014 to 2019, its performance was steadier, with mostly positive years except for 2016, which saw a decline of 10%. The year 2020 was a milestone, with an explosive gain of 743%, followed by continued growth in 2021, plus 49%, before a sharp drop of 65% in 2022. In 2023 and 2024, the stock rebounded strongly, posting gains of 101% and 62%, reaching an all-time high of $479 in December 2024. However, 2025 so far has shown a downward trend, with the stock declining roughly 14% year-to-date. This indicates that while Tesla maintained strong annual performance, it has entered a corrective phase this year. Tesla's stock shows several positive signs despite the recent decline. 1. Strong recovery history. The stock has demonstrated the ability to rebound from significant corrections, as seen after the 2022 drop. 2. Steady product demand. New vehicle models and the ongoing expansion of energy products support long-term growth. 3. Technological leadership. Tesla remains a leader in electric vehicle and autonomous driving technology, attracting investors with a vision for the future. 4. Global expansion. New markets and factories in Europe and Asia increase production capacity and diversify risk. 5. Support from the supercharger network. The growth of the global charging network enhances brand value and customer convenience. Despite the positive signs, Tesla's stock also shows some negative factors. 1. High volatility. The stock price is highly volatile, with sharp rises and falls that increase investment risk. 2. Dependence on Elon Musk. The company's image is heavily influenced by the CEO, and personal events can create instability. 3. Competition in electric vehicles. Traditional automakers and new startups are investing heavily in EVs, increasing pressure on Tesla. 4. Economic risks. Rising interest rates, inflation, or declining demand could impact the company's revenue and profits. 5. Regulatory challenges. Emissions, safety, and autonomous driving regulations may affect operations and production costs. Tesla stock price estimates vary widely, reflecting both the company's high potential and significant risks. Some analysts are bullish, with price targets as high as $500 to $550, based on the development of autonomous driving, robo-taxi services, and artificial intelligence. But others, more cautious, place the fair value much lower, even closer to $130 to $250, citing an excessively high valuation, declining deliveries, and challenges in key markets. Overall, Tesla is considered a high-risk and volatile stock, with prospects largely dependent on the success of its innovative projects and its ability to maintain a competitive advantage. Tesla is often valued at valuation ratios that far exceed the automotive industry average, reflecting high expectations for future growth. The price-to-earnings ratio remains extremely high, indicating that investors are discounting significant earnings growth in the coming years. At the same time, the price-to-sales ratio is also elevated, suggesting that the market is placing more value on Tesla's innovation and technological edge than on its current sales. However, this valuation makes the stock vulnerable to sharp fluctuations, especially if financial results fail to meet high expectations. Tesla stock is one of the most controversial options on the market. On the one hand, it attracts high expectations due to its leadership in electric vehicles, investments in artificial intelligence, and the prospect of robo-taxis. On the other, its valuation remains extremely high compared to current financial results, while sales are under pressure and competition is intensifying. Consequently, Tesla can prove to be an investment with significant upside potential, but at the same time, it is also high risk, with potential sharp fluctuations in the share price. It is mainly worth it for investors with a long-term perspective and tolerance for volatility, who believe in the company's vision. For more conservative investors who focus on stability and predictability, a wait-and-see approach or diversification into other companies in the industry may be more appropriate. These are the data for Tesla. What do you think? Buy or short? Let me know your opinion in the comments.